We'll get the intro rolling. Hi, Nat. Nat Cop, Premium Mortgage. Thanks for coming on. Well, first and foremost, I know you've been doing mortgage for a long time. I've never heard the story about how you got into it.
How I got into mortgage.
Yeah.
Many years ago.
Okay.
It's been 23 years.
Oh, wow. Okay.
I was working at Independent Health
Okay.
as like a customer service rep.
Sure.
And I had found out that they were looking for something in mortgage at M&T.
Okay.
So I interviewed, got the job. I was originally hired to be a construction loan contractor approval person.
Oh, wow.
So basically, they did a bunch of 203Ks back in the day, construction loans.
Sure.
So the builders needed to be approved and the contractors needed to be approved. So basically, they'd give us the information, we would put it together, send it off for the approval.
Sure.
That was a full-time job to somebody.
Ah.
I was there 2 weeks and I was like, okay, what else?
Right.
So then they're like, okay, we need to do something with her. So I became the construction loan and 203K processor for all of M&T.
Okay.
So anyone that did a loan like that, I did all the processing for.
Okay.
So that's why I have that background as well.
Sure.
So it kind of went that and then went into sales assistant back in 2004.
Okay.
And then fully originated back 2017.
All right. Very
Yeah.
good. Yeah. 2008 was fun.
2008 was interesting.
Yeah.
Yeah, it
That's, yeah.
Well, we had all these products. Like we had, those in no income, the stated income, like
Yeah.
everything that we knew kind of like flipped on its side and we had to start over and like learn the basics.
Yeah. Oh, no doubt.
Yeah.
It's lawlessness back then. I've heard. That's it.
The good thing about Buffalo, though, we don't have like where other states or places have, like we didn't see like that huge crash.
Yeah.
Like Florida,
Right.
like things like that.
Yeah.
We're, as much as people talk about Buffalo, like we're usually pretty steady.
Right.
Like we ride the waves pretty well.
No doubt.
Yeah.
Yeah. And even like I understand when people come to me and they say like the rapid appreciation is concerning from a super outside perspective, but like I know that things now, the checks and balances are way more than they were back then. And it's like and I'm actually going to talk about this a little bit later today, but like we have the jobs.
Yeah.
And like the economy boomed at the same rate that these houses were going up, and we've always been way low. So like
Correct.
it's
really just a correction for us,
Yeah.
more so than an overappreciation.
exactly.
Yeah.
Yeah. And like in Florida and Vegas in the 2008 era, if you had like a $300,000 house that's worth $650 2 years later, like that's
Right.
like it doesn't take rocket scientists to
Exactly.
figure out. Yeah. But okay. Well, like I said, thanks for coming on, and I really want to do this because I do a lot of first time home buyers and stuff like that, and like
Yeah.
people are like buying a house is so hard, and it's like yes, and it can be, and obviously there's competition and stuff like that, but I think people really have a lot more of a mental block about getting the mortgage than they do the house.
Getting pre-approved. Yeah.
Exactly.
Yeah.
So like, is it like, is there a barrier of entry? Is there like, is there like some baseline stuff that people can shoot for to like they know they want to buy a house, they don't know how to get there. What are like some cash on hand and credit requirements to get there?
Yeah, I mean, you're right. Like, someone should get in front of a loan officer because there are multiple factors in a pre-approval.
Sure.
So there's really no, like, one size fits all for somebody.
Sure.
Credit-wise, we're looking hopefully for a 620. And the reason being is that your credit score is a determination of, like, what you're doing with your credit.
Right.
So if you have anything less than a 620, that means that something's not going right.
Sure.
So we are looking at that, credit history, age of accounts, payment history, collections, derogatory, utilization is huge. So like how much you have available versus how much you're using.
Okay.
So all of that goes into a, credit score.
Mm.
We're also looking for employment, stability of income,
Sure.
how you're getting paid, because a W-2 employee versus a self-employed employee
Yep.
have different requirements.
Yeah.
We're also looking at the likelihood of that employment continuing
Sure.
down the road. So all those factors are being considered. Assets, yes. Can you get into something for less down, minimal down? There are programs that are out there, yes.
Sure.
But your best bet is to save.
Mm-hmm.
Have a little skin in the game, put a little down, but also have money set aside for anything unforeseen, any appliance that needs to be fixed or a furnace or something down the road, because you always know something's going to go.
Always. Yeah.
So we're looking at the overall picture of a customer, and all of that's going to be different for each individual.
Yep.
So it's definitely best if you're ready and you're serious about buying to get in front of a loan officer.
Yep.
Because they'll be able to review everything and then put you on a path. And even if we have to say no now, it's not a no forever. It's just a not now.
Sure.
And then the loan officer can give them ideas on how to fix whatever needs to be fixed so that they're ready in the future.
Sure. Totally.
Yeah.
620 is a lot lower than I would have thought, to be honest with
Yeah.
you.
I mean, definitely
Yeah.
but you could have a 620 because maybe you don't have a ton of credit out there.
Right.
Or maybe you're new to the credit game.
Right.
So here's a lot of people have this, well, I don't have any credit. Like, isn't that good? Because I don't have any. Well, now you don't have a credit score.
Right.
So how do you determine credit worthiness if you don't ever take out credit?
Yep.
So no credit does tend to be a negative.
Exactly. Yep.
Yeah.
Yeah. I know this guy that he would, he gets his paycheck every week, and he would go have it cashed at the convenience store, and he never had credit cards or anything.
Yeah.
And he's like in his 30s, and he's got nothing, and like he's got his apartment and his life and whatever. But we're like, put your gas on a credit card and
just pay it off.
Right. Exactly.
Right.
And
it doesn't have to be a lot.
Right. Yep.
Just pay something and pay it down.
Exactly. Yep.
It's going to generate a score.
Yep.
So especially like the younger kids, maybe don't have a ton of things out there. So you could have a 6-something credit score.
Yep.
And still be okay.
Totally. Yep.
Or you can have a 620 credit score because you let a lot of things go and have collection accounts.
Exactly. Yeah. Yeah. And that can be harder to dig out, but not impossible. I mean, I've heard of all kinds. I mean, people really mess, and I'm actually guilty of that. When I was like 18 years old, I got this credit card, and I'm like, I'm just gonna stop paying this, and it got bad. And like obviously worked our way out of it, and I'm by 27 I was a homeowner, so it's like doable, but it's people get caught up and they feel like they can't do anything about it. And
Well, right. Once you feel like you're stuck.
Right.
Well, that's why I feel like in high school or college, there should be a financial literacy class.
Oh, my God. Yep.
Teaching kids how important it is to utilize credit and not get in over their head.
Right.
Because that's where it starts.
No doubt.
That's pretty much, and then they feel like they're stuck, and then they just keep going down that path.
Exactly. Yeah.
So, yeah, I mean.
And it's simple stuff. Like there's balance transfer options out there with 0% for like a year. Like if you have this giant weight over your shoulder, like just start chipping away, figure it out. And it's easier said than done. I get that. But
But then, you might think like, oh, I have so much. And then if, like, again, getting in front of us, we could say, well, if you do X, Y, and Z, that's going to help you more than doing, the other things.
Sure.
So it gives them a plan instead of just like seeing this whole picture and saying, I can never get there.
Right. It's like anything else. It's I remember getting into real estate and thinking, how am I gonna figure this out? And it's
right. So one thing at a time, one step at a time.
Bingo. Yep.
But people also think, well, I have a 750 credit, I'm good all day long.
Mm-hmm.
Wait till the last second to get pre-approved, and then realize, no, you're not.
Right.
Because again, we are looking at the overall picture.
Sure.
So you might have a 750 credit score and might have that on-time payment history.
Sure.
But you might be utilizing your credit cards. Too much.
Yeah.
Which might hurt your approval.
Okay. Fair. That's Carrying balances on a credit card just seems like a universally bad idea.
Yes. You shouldn't.
Well, I've been there. Like I said, exactly. No doubt. Yeah.
But try to keep it down to a minimum.
Exactly. Yeah. No doubt.
You don't need every store card out there.
No. Yeah. If I get asked at one more checkout line if I want to apply for I'm like,
well, you get stuck. Oh, save 20%.
Yeah. Yeah. It's like, yeah, but
it's not worth it.
No. But and I guess kind of to that point, so like I would say the most common question I'm asked in general, other than my name, is first-time homebuyer programs.
Mm-hmm.
And before we got rolling here, we were kind of talking a little bit when you first bought your house. Like there used to be these programs out there where like there was like dollar match saving programs and stuff like that. So like today we're January 2024. Like what's out if someone wants to buy a house for the first time? What would you direct them to for that?
So I can really only speak to what we have.
Of course. Yeah.
So I'm looking at, our conventional, we have 3% down programs.
Sure.
We have Sunny May, which is my go-to, which is the 3% down.
Okay.
at least 3% down payment assistance. Sometimes they give us more, depending on what's available.
Okay.
You can add concessions to that.
Yep.
So it's going to depend on, again, what the profile of the customer looks like versus
Sure.
like the products we have available to them.
Sure.
I mean, there's also closing cost loans depending on the township that they're going to.
Okay.
There's some grants available. So it just depends on the area they're looking.
Sure.
But my go-to is Sunny Mae,
Okay.
or FHA.
Yeah. Right. And so, is FHA a first-time homebuyer program?
It's not technically,
Okay.
but FHA is a great program for customers because there's a lot of wiggle room with FHA.
Okay.
It is a 3.5% down on 1 to 4 family. It's more forgiving on debt to income, so it does allow for someone to maybe have a little bit of a higher price point.
Sure.
Because of that.
Right.
You can add a 6% seller concession.
Right.
You can basically get in for no money. Like, you don't really have a minimum investment of your own fund. So if like you have grandpa that wants to gift you money for a house,
Okay.
all of that can be gifted.
Okay. That's huge.
Yeah.
Yeah.
FHA allows you to do proposed rent. So if somebody, a first-time home buyer that's like, hey, I'm going to buy a double, I want to use the rent to help offset that payment.
Sure.
You can use proposed rental at 75% of what's the other unit's getting.
Sure.
Obviously helping with the income. So when I hear, well, my FHA pre-approval is not is not going anywhere, it makes me kind of upset because it's like, this might be the best program for that person for these reasons. And
Right.
it's not a negative reason.
Right.
It just makes sense for them at that point.
Right. Right.
So, and it's more forgiving on credit scores too. So
Yeah.
like that 620
Yep.
is probably going to FHA.
Right. Yeah, totally.
Yeah.
And so when anybody is looking at the parameters of what they need to accomplish this, like having some savings, even if
Yep.
it's like a few grand, you
Yep.
can fit into some FHA programs. Credit, debt to income, credit utilization. Is there anything else that people should have to work? Like how does student loans affect your trying to get a mortgage?
So student loans are becoming an issue again because they were on pause for a while.
Right.
Well, now they're becoming due.
Okay.
If you are in a payment plan, so like say you've gone into an income-based payment plan,
Yep.
on most products we can use whatever that payment is. Is it $0? Is it $100? Whatever it is.
Okay.
FHA, we always have to hit you with 0.5%.
Okay.
So if you have $100,000 in student loan debt, that's a $500 payment right there we have to hit you with.
Okay. Sure.
No matter
Regardless of-
what your payment.
Okay.
Now, if they're deferred or in forbearance,
Yeah.
FHA, we're hitting a 0.5%.
Yep.
On conventional, we're hitting them with a 0.5% as well.
Sure. Okay.
So they do play a factor because there is some sort of payment we have to hit them with.
Totally.
Because at some point they're going to be due. That's something that can never go away.
Right.
You can't get rid of it in bankruptcy. Like, that will be something that you will have to pay down the road.
Sure. And that's so when you're looking at like 0.5%. So like you're not, the bank isn't looking so much at how much you make per year as much as they are per month and how much like fixed expenses there are. And that's, I think people get tripped up on that because like I know people that are making piles of money, but they're like every month it's getting like every penny goes away and it's like
It's incredible
Yeah.
what, like, when I pull things sometimes and I'm like, okay, they're making really great money.
Right.
And then I look at their debt and I'm like, what is happening?
Right.
Like, why? And then, like, right, every loan or credit card or what car payment, whatever they have,
Yep.
is a monthly obligation
Yep.
that we have to then add
Yep.
to what their proposed mortgage payment's going to be.
Right.
And it can add up.
That's called debt to income.
Yes.
That's right. Exactly. What's the threshold? Like,
Well, we'd love to stay under 45 on conventional.
Okay.
Sunny Mae's a hard stop at 45.
Okay.
FHA will tend to give us maybe up to 55, 56,
sure.
depending on, what else is going on with the file.
Sure. Okay. And so backing up a little bit. So like back in the day and even still now, like a conventional product is like the most standard. And
Yeah.
like it used to be that like there was nothing less than a 20% down option.
Right.
So like, and that was forever ago. That's different now. But like you got to have at least a 720 probably for a conventional somewhere in there.
Well, I mean, you could have less
Yeah.
than that.
Okay.
I mean, it will spin, but a lot of times, there's a pricing grid on conventional.
Sure.
So you're going to get dinged on rate
Okay.
if you have a lower credit score.
Lower credit score.
So it might go, but you might be paying for it in rate.
Sure. Okay. But so but your conventional is like the most standard product.
Yeah.
And then when you get an FHA, it's a little bit looser. You
Yep.
can usually the upfront costs sometimes are a bit cheaper, and obviously you can roll in more concessions.
Yep.
I know that like they bake in PMI forever
Yes.
and stuff like that.
Yep.
But I mean, I'm a huge advocate for the idea that like okay, so like even I pay PMI. I have a conventional. I pay PMI. I don't care because like I think I pay $80 a month in PMI, and I put 5% down. If I'd have put 20% down, you know how long it
You
takes?
got to compare.
Exactly,
Right.
$80
Yes.
a month to make up a 15% difference. Like it's,
Correct.
but people hear fee and they're like,
Right.
but so conventional FHA, and then we're kind of going from easiest to most difficult. I've heard Sunny Mae is an underwriting disaster. Nightmare.
Depends on the lender.
Yeah, sure. All right. Yeah.
It depends on how they're like pre-approved up front. So at premium, we have their underwriting engine. So
Okay.
like when we're pre-approving them, we're running them through Sunny Mae
Sure.
to make sure that like we're checking all the boxes that Sunny Mae is going to require. Are there blips, like maybe they don't like the property. Maybe they don't like something that comes in down the road. Sure, like Sunny Mae can be a pain in the butt.
Sure.
Because it is fully underwritten by the state. So like we do the loan and it closes in our name, but it's their decision is made by Sunny Mae.
Sure.
So but because we do all that stuff up front, we're pretty much capturing things that like could get caught up down the road.
Okay.
Like I said, barring anything with the property
Right.
itself.
Right. Which you can't know until
Exactly.
you get there. But like, so if you get to that point with a Sunny Mae, like there's grants, there's down payment assistance,
Yes.
stuff like that. Like, what is like the elevator pitch for a Sunny Mae loan?
The down payment assistance we're going to put somebody in Sunny Mae. Well, Sunny Mae also is the only product that will allow us to use alternative credit for all of their credit. So if you don't have a credit score,
Yeah.
They'll allow us to use all sources of alternative: rent, utilities, car insurance, cell phone bill, to offset that they don't have a credit score.
Sure.
So
That's huge.
So if they don't have a credit score, we'll consider that.
Okay.
If they need the down payment assistance, they are coming back out with their $30,000 down payment assistance program in the first quarter of 2024. So that's huge
Yeah.
to help somebody put a large chunk of money down on a house.
Absolutely.
So yeah, that's really or sometimes like the rate tends to be better on Sunny Mae.
Sure.
With how fast they came down on a conventional side, like they're really not better right now.
Right. Right.
But if they need the down payment assistance, it is an option.
Exactly.
So that's why we look at everything as a whole, because like from pre-approval even to application, something might change and we'll say, oh, let's pivot because this might make more sense for you too.
Totally.
So Sunny Mae, again, is great, for...
Is there an income gap on that? Or income?
There is an income limit.
Okay. Yeah.
There's actually a purchase price limit on them too.
Really?
Yeah.
Okay.
Obviously, you can't buy $1 million house on
Right.
a first-time
Sure.
buyer.
Yeah. Right. Yeah. Sure.
But yeah, there is an income cap.
Okay. Is that like median for the county you're living in? Stuff
Yeah,
like that?
it was like 82 for... so Sunny Mae has two different programs, Achieving the Dream and Low Interest.
Okay.
Those are both income capped.
Sure.
If you're under 82, you're going to go Achieving the Dream, which has a slightly better rate.
Okay.
And then I believe it's up to like 101 or something for the low interest.
Is that household or is that individual?
It's household.
Okay.
So Sunny Mae
Yeah.
will use household.
Yeah.
So if you're married and you only have one borrower
Right.
on the loan, they're still going to ask for the spouse's income to verify.
Okay.
If it's boyfriend-girlfriend situation,
Right.
no.
Okay.
It's really only the person on the application.
Huge.
They used to ask for kids' income too,
Oh my
but they don't do that anymore.
Yeah. First time home buyer, you got a kid.
Right, like if
Well,
anyone that was
has
living in the
income.
house over 18, they were having us add, but
Yeah.
they don't do that
Yeah.
anymore.
Yeah, exactly. Yeah. I meant first time home buyer that has a kid that's making income. So
Oh, yeah.
your kid is either making income very early or
Right.
or you've waited a long time. It's
Right.
okay. But yeah, no, that's I hear about the Sunny Mae all the time and I've done a few of them, and you and I had talked about the idea that like it's the banks that don't know what they're doing it can be
It
disastrous.
it is.
And premium, so far as I can tell, is the only one that has everything up front. Which is, yeah, exactly. It's huge. So
We don't like surprises.
no, nobody does. Nobody does.
Yeah.
But okay, so yeah, so the bottom line is like there's options out there.
Yes.
Like it's I find I would even say the majority of people that I work with to buy a house, they get to that point and they're like, this is a lot less of a steep climb than we thought it was going to be. And it's like, yes, it is. It's
Right.
totally doable.
Another misconception is we do not charge for pre-approvals. So just get them done. Like people think they have to pay for a pre-approval, and I think that's what's stopping them too.
Sure.
They do not have to pay for a pre-approval.
Sure.
Like our upfront conversation is free.
Right.
Like
Totally.
so.
And that's like, you know what I hear more than that is the hard credit pull. People are freaked out about hard credit pulls.
Yeah.
How does that work? Like, obviously, you have to hard pull credit to get a prequal, but like, can you have that conversation before the hard credit pull? And if you do that and 3 months goes by and that expires, is it disastrous to hard pull again?
No.
Okay.
It's necessary. So people will, well, I have my Credit Karma. Like those don't.
Right.
We're lending you hundreds of thousands of dollars.
Right.
So we're going to pull a very comprehensive report that encompasses everything that pretty much is going on with your credit.
Right.
And Credit Karma has a different scoring model. We do a FICO.
Okay.
Even there's different FICO models too. So like your credit card FICO is going to be different than what we actually pull.
Sure.
We're also pulling all three bureaus. So we're going to see, and we're going to take the median score
Sure.
of, what's going on. Yeah. But it's necessary for us to see that information so that we can determine if we can qualify you. It's going to give us the information if there's judgments out there, if there's bankruptcies, if there's, what the utilization looks like, what the payments look like. Because people would say, well, I only have 2 things out there and this is the payments. But then I pull a report and there's 10 things that they pay on a monthly basis.
Yep.
So it's necessary for us to review so we can give you accurate information. Mortgage credit pull versus like a retail credit pull are completely different. If you're trying to get credit cards from store to store, that's going to hurt your credit. If you're looking for a mortgage, obviously the bureaus know you have to have that done in order to get the mortgage.
Right.
So it's a very minimal effect on your credit.
Sure.
And then if you have to repull it down the road, again, it's a minimal. Another thing that people misconceive is that they think because a mortgage pulled that their score went down. But on any given day, any creditor is reporting to your credit report. Okay. So if on the same day I pulled the mortgage, a creditor pulled that your utilization is higher, that might be driving down your score, not my mortgage pull.
Right.
So like that, they have to understand that like anything that's reporting on their credit could change their score at any given time.
Sure. Okay.
So,
yeah. Well, it's this giant mysterious beast of a thing, the credit. It's wild. Yeah.
And I don't think we'll ever truly comprehend it,
Sure.
but we just gotta take it.
And that's like as unbiased as it can possibly get. The best advice I have for people is like I see people go down these rabbit holes about like how the credit pull is going to affect, and it's like I understand, but and tell me if I'm wrong here, because if I am, then I've been spewing analogies that are not true. But like if you do the hard pull for your pre-qual and then you do it again, it's not like nobody thinks you're going to get 3 or 4 different mortgages.
No,
if you do that with credit cards,
correct.
That's where it gets weird.
Correct, because now they're taking. Oh, you're taking out another balance.
Right.
Oh, you're going to have an available balance of this much, and then another available balance.
Yep.
You obviously don't want to close anything you currently have, but you don't want to continue to open things.
Yep.
To have all these lines of credit open.
Right.
And then you like having, you don't need 15 different credit cards, that you have to pay. Right. So yeah, right. A retail pull is definitely, because those are the things that are like going to get you in trouble. Right. Those have like, you can max out a credit card. You're not maxing out a mortgage.
Right.
Like you have a mortgage, but like it's set. You're paying it down. You're never like adding to it.
Right.
Whereas like a credit card, you can keep adding and maxing it out.
Right. Totally.
Yeah.
That's so. I guess the moral of the story is like people pick specific things to kind of like tell themselves a story that just isn't true. And again, as unbiased, obviously, I want everybody to buy a house.
Well, they want to also listen to their uncle's cousin's mother from 15 years ago that could get a mortgage without. Yeah. Yes.
I ran into that last week. It's like, and people are like over the asking price, and it's like. I don't even know how to have this conversation anymore.
Right, like, I can't.
Yeah, exactly. But, so switching gears a little bit, and this is obviously a massive topic, but like somebody owns a house currently and they want to get into the next house. Um, I would say the majority of people aren't saving up that next down payment. So, like, what are some tools or options for them to get from point A to point B? Yeah, that's
Okay.
yeah,
If they currently own a house,
Yep.
And they've built up some equity,
Yep.
We have a bunch of different options.
Okay.
It's also going to be determined if like they can hold additional debt.
Okay.
So if you currently have a mortgage and you're trying to buy a new house,
Yep.
but you don't want to go contingent on your sale,
yeah,
you obviously have to qualify for whatever additional payment you're adding to that debt to qualify.
sure,
If we do go non-contingent, but you're trying to tap into your equity, you have two different options.
Okay.
You could take out a home equity line of credit.
Okay.
That would be done. You could do it alongside the mortgage application. Go to whatever local place that does home equities.
Sure.
Get that in order. Usually they allow you to tap into about 80% of your equity minus what you owe.
sure,
There's usually no cost to open a home equity, but there is a prepayment penalty if you close it prior to 3 years.
okay,
It's usually minimal, less than closing costs, but like there would be something that you'd pay back if you sold your house and closed that home equity within the first 3 years.
Okay.
But that's a way of tapping into some of the equity.
sure,
We also offer a bridge loan.
okay,
That is another way to tap in the equity, again, up to 80%. We'll do like an appraisal to see what the value of that current home is. It's intended to be a short-term financing. I plan on selling. We don't want it to be contingent. We just want to tap into the equity to put down on the new house. And then we'll pay it off as soon as we sell our house.
sure,
There is an interest rate on that, which compounds until it's paid off.
Okay.
And then usually a 2%
sure,
fee. That again is paid when the payoff of the whole entire thing is done once they sell their house.
sure,
If they don't qualify for any additional payments, we would put them contingent on their sale,
Yep.
where they would be, selling their house at the same time they're buying a new house,
sure,
and then using the proceeds from the sale of their house to close.
sure. That makes sense.
Yeah.
Yeah, I I see a bunch of people, and actually, obviously lately with the way rates have been, see people that are like they're a lot closer than they think they are.
Yeah.
And it's that bridge loan thing is huge.
Yeah.
I don't know of anyone else offering that. And I didn't know about that 3-year prepayment thing
On
on a
home
HELOC.
equity?
Yeah,
Yeah.
that's but it's
But like I said, it's a lot like a home equity versus like a bridge loan
Yeah.
will probably be cheaper,
'Kay.
even with the prepayment penalty.
okay. Then why would somebody do a bridge?
Maybe their house is already listed.
Ah,
Because if your house is already listed, you're not getting home equity. Or
oh,
timing. A bridge loan could close at the same time as the mortgage.
sure,
It might take longer to close on a home equity if you don't already have it in place.
sure.
So it just depends.
Yeah. I've heard home equity line is kind of it's not like overbearing, but it's like there's steps.
It's another it's another application.
Exactly. Yep. And that when I was
Yeah.
a kid, I remember hearing people refer to things as second mortgage, and that is what a HELOC is. Like
yeah.
exactly.
Yep.
Yeah. But so how does the bridge work? Like once you close, like it's pretty seamless, right? Like so your current house, there's equity in it. You're using a bridge to pull that equity out to use for the next one, and then when you close, it's just one nice.
Well, the bridge loan is its own loan, like because it's on the current property, not the new property.
Right. Yep.
And it's really just held by the attorney.
Oh. Okay.
So it's like a private
Okay. Yeah.
mortgage that just gets paid once they sell their house.
Sure.
So they would contact the attorney that's holding the bridge loan and just say, okay, I've sold the house, ready to
Yep.
pay off the bridge loan, and then they'd get the payoff and pay it off.
Boom. Is there a front cost to that, or is that?
So there is no upfront. So like I said, like they disclose, I believe it's like 2 or 2.5 points.
Sure.
And then whatever interest rate that compounds over the number of months that you have it out.
Okay.
And then that just gets paid off at closing. So like they just add that to the payoff.
Yep. So there's a HELOC.
Yep.
There's fees and stuff built
Yep.
into that. Okay. Cool. This is obviously a super high level question, but like, do you have general tips for what to be looking out for when you're trying to get a mortgage?
General tips, like if you're getting ready to be pre-approved.
Getting ready to be
Yeah.
pre-approved, or that the moving from one house to the next situation.
Oh, well, if you are looking to tap into some of your equity, but you don't want to sell, if you know you can go non-contingent,
Yep.
making sure you know what you want to do
Sure.
before you list the house.
Sure.
Because if you want to go the home equity route,
Yep.
you want to get that done prior
Sure.
to do anything.
Yep.
Or just knowing your options, like that the bridge loan is out there, or or if you have to go contingent, making sure your house is in order.
Sure.
So that you can get it listed as soon as possible.
Totally. Yep.
And knowing that you have all the legal documents ready.
Yeah.
So the survey, all that stuff, so that there's no delays.
Exactly. Right. That's exactly it.
Yeah.
Yeah. And I just, I have so many people that say, okay, I'm ready to buy a house. I'm ready to get a mortgage. I'm going to go to wherever my checking account is. Like, I'm sure they have good programs and stuff like that. But like a company that specifically does mortgages, are there advantages there compared to your, I don't want to say brick and mortar, but like you just like it's, if the convenience of going to one singular branch is like top priority for you, fine. But like there's got to be advantages other than going to just Bank of America, to which I dislike Bank of America, but it's like I'm sure you guys are ultra competitive. I know for a fact that the customer service is top tier. Like, are there other benefits there?
I mean, as far as like, so we're not a broker, we're a mortgage banker,
Okay.
but we do shop our rates to different investors.
Okay.
So like pricing,
Yep.
We might have some pricing, better pricing, I guess.
Sure.
Obviously our service,
Yep.
our loan officers,
Yep.
are pretty top tier.
Absolutely.
So
Yep.
anyone you work with at Premium is pretty
Absolutely.
amazing.
Yep.
But you also know like everything is done in-house. So like we have control. So like if we have questions, we can go to underwriters, we could go to processors. Like we can get answers very quickly.
Yeah.
To help, get that loan back on track if it, happens to get off track.
Totally. Yeah.
And you have us from beginning to end.
Right. Absolutely. And that's, yeah, I mean, I, not to be a bandwagon, but I love Premium. I really do. And there's no, I don't get kickback. Nobody gets kickback. There's nothing like that. I just, first and foremost, the being able to like, you go to one of those brick and mortar ones and you talk with someone for like 30 minutes and then good luck. Whereas like, I mean, the payment calculator alone.
Our technology is amazing.
Amazing. And being able, for people to be able to wrap their head around total cash to close and monthly payment while they're standing in the house and
Yep.
making those is critical.
Yep.
And not only that, but I mean, for almost as long as I've been in the business, it's a hyper competitive world to be in to try to buy a house. And Premium has that reputation. I mean, it's just universally known that things are going to go smooth. If stuff does come up, you guys have
We're
the
on
most
it.
creative ways to work through that. Not to, well, my favorite thing is it's veteran owned. I'm not a veteran,
Veteran
but
owned,
like
yep.
I know for a fact that veterans, there is no better program. Like I know you guys knock some fees off and
Yep.
stuff like that, but it's just like you guys care about veterans, and that's huge, and that tells me a lot about the company in general.
Yeah.
So
Yeah.
not to be a fanboy, but I'm kind of a fanboy.
Oh,
So
thanks. Well, like you said with our calculator, I mean, we're very transparent. Like,
yeah.
we wear our heart on our sleeve. Like, you want to know anything, it's right there. We're not going to, like, bait and switch anything. Like, it's there in black and white.
Yep. And you guys are available by text message. Like it's the simple stuff that like
Yes.
it's not like the suit 9 to 5, Monday to Friday. Good luck. Otherwise, like no. It's and that's and it's that's not just a feel good thing. It's like for someone that wants to accomplish that. That's huge. It really does bring them closer to being able to accomplish that.
Yes.
And yeah, there's just, and we've touched on this a couple of times in this conversation, but like, I really think that people build up this thing that makes it seem impossible. And it's like, no, you get with the right people and build the right team around you. Like this is really not that difficult.
It's not.
Yeah. And the fact that more people don't know that is beyond me, but whatever. I get it. I understand it. And it's obviously like the headlines. Oh, the headlines every week. It's like we're over here. And people get emotional and it's like, okay, like, and we're going to talk about this a little bit later today, but the Zillow, like every real estate agent in Western New York
my
bashes Zillow, and then Zillow releases one article that says Buffalo's going to be the hottest market in 25, and all of a sudden everybody's on the Zillow, and I'm like, what are we doing here? But
I know.
whatever. But yeah, thank you for coming on. Thank you for being. I mean, you're my favorite loan officer, really. I super appreciate you being such a partner in all the things that I do. And yeah, anything you want to plug, anything like that?
Well, yeah, just call Premium for your next pre-approval.
There you go. And in that. Thank you.
Thanks.
You guys want to play that game or no?
Oh yeah, we got a fun game too. I forgot all about the game. Yeah. Okay. Cool.
Okay.
Very good.
I have a list of celebrity houses.
Okay.
I guess how much they are.
Okay.
Anywhere in the world, I assume.
I'll tell you a little bit of info about
Okay.
each one.
Okay.
Okay.
Cool.
Owns it.
Very good.
So, let's sort of-
Price is Right rules. So we're guessing value.
How
Okay.
much did it? The numbers I could find was the most recent sale of this.
Okay.
Okay.
Sure.
So
Totally.
This is Josh Allen
Okay.
in California. It's 2,800 square feet, 4 bedrooms. I have a few pictures of it.
2,800 square feet.
Some pictures of that.
In California.
Do you know where in California?
Some gated community.
But like town.
I'm
Like,
gonna say 5 million.
yeah. I mean, 2,800 square feet. I'm gonna go 3.5 million.
This was 7.2.
Woo! That's gotta be a really nice part of California. Well, obviously.
Wow.
Friggin-
Okay.
There's there's other athletes in the area.
Sure.
Couldn't
Okay.
find anything on his house in Buffalo. I'll tell you.
I know he lives in Elma. I don't know where I know like Von Miller and McDermott are neighbors. I know that. Like
Yeah.
there's some stuff like that. But
So this I only have 2 pictures of.
Okay.
This is Kanye West in Malibu.
Ooh.
It's 4,000 square feet.
Yep.
It needs windows, doors, plumbing, electrical, HVAC. It contains 1,200 tons of concrete.
Wow. I actually just saw the article and I'm annoyed that I,
I
don't
think-
remember the number, but
yeah.
go for it.
I say it's something ridiculous like 20 million.
Yeah, on the beach in Malibu, you gotta
Yeah.
be. I don't want to
But
go
it
low.
needs work, so
Yeah, exactly. I'll go 17 million.
Reportedly bought it for 57 million.
Oh,
what?
He's trying to sell it for 53 million.
ew.
Oh my god.
$53 million.
So the next house.
We're so off.
Kanye. Yeah, I know, right? Yeah. Well, this is like you don't take mortgages for stuff like that.
This is Harry Styles.
Okay.
It says Hollywood-ish area.
Okay.
3 stories, 4,400 square feet, 4 beds, 6 baths, and reportedly a putting green.
Where is it?
Malibu? Oh no, I'm sorry. Hollywood Hills area.
Hollywood Hills.
40 million.
Yeah, I was gonna say we gotta go way higher, obviously. I'll do 22.5.
6.7.
Really? Harry Styles, very
Weird.
frugal.
I wanted to say that, but I had a feeling like it was going to be crazy high.
California's banana. Like they're so like
Yeah.
it's
Considering him and Josh's house is more. What? It's obviously location.
yeah.
Definitely locate, yeah.
So this one is kind of a tricky one, but this is Taylor Swift in New York City.
Okay.
This is got 7 bedrooms and 8,300 square feet mixed across the
8,300
mixed
square.
across the units.
Okay, so it's going to be 7 million.
I'm gonna do 10 million.
So, like I said, it's tricky. She initially bought the one place for 17 million, and she expanded 3 units, then 3 units next to it for another $10 million each.
Oh my god.
So she essentially owns a whole block of New York City, and one of them is an
For 20.
apartment for her security team, like a 3-bedroom.
Oh, I thought you were going to say her cat.
I got that too. Yeah. So what's that? $27 million? Oh.
No, it's so 30. It's like 50 million.
Wow. It's a lot of bread.
And
It's at marina tours.
Yeah.
yeah, that was the last one.
Very good. Thank
This
you,
was
Annette.
Great.
Yeah, I appreciate that. Yeah, I think so too. It was.
I like podcasts way better than